So we talked about what MYGAs are, and we talked about why people might want to buy them. Now let's discuss the key factors to consider when purchasing one. While all MYGAs offer a guaranteed interest rate, there's more to it than just the rate. You see, a MYGA is not a commodity, and there are differences or features that each company will build into their product, and each of those features actually have a cost associated to it that the company priced into their product. So the more features a product has, the lower the credited interest rate has to be to pay for those features. Because you see, a contract with the highest interest rate might not be right for you if you also want the highest level of liquidity. To help with that, I provided you with the 6 key factors to consider when choosing a MYGA drawn from my 30 years plus working with them. I believe the biggest reason why people buy annuities is for safety and guarantees. We learned earlier that annuities are backed by the strength and security of the insurance company that issues the policy. So it would make sense to only buy one from a company big enough to credit a fair interest rate, but also strong enough to financially make sure you never lose any money. Fortunately, there are companies whose business is to rate life insurance companies according to a variety of financial measures. One of the most well-known insurance company rating agencies is a company called AM Best. AM Best analyzes all insurance companies' financial statements and operations and assigns a grade from A++ to not rated at all. When recommending a MYGA to a client, I only choose from companies that are rated A- or better by AM Best. Next, let's talk about how interest is credited. MYGAs, as we learned, credit a specific interest rate for a specific term, usually 3 to 10 years. Most credit compound interest, but there are a few carriers that offer simple interest. What's the difference? Well, remember when we talked about triple compounding? You know, when you earn interest on your principal and earn interest on your interest? Well, that's assuming you have compound interest. Simple interest would credit the policy with interest calculated each year from the initial premium, not the current policy value each year. Now, is that important? Well, if you're buying a MYGA for guaranteed growth, it can make a huge difference depending on the interest rates offered. Now, if you're buying a MYGA to receive interest as income, well, you would not have interest to compound anyway because you would draw it each year. So since simple interest contracts typically credit higher interest rates than compound interest products, that might work better if you want income each year. You would want to work with a retirement planning specialist, a guide, to tell you what equivalent yields are when comparing simple versus compound interest. Third on our list is liquidity. You might also remember when we talked about how life insurance companies invest to cover very long-term obligations and are able to earn more interest in their general account and thus credit a higher rate than, say, a bank, right? Well, the insurance company can only credit higher rates if they know for certain the company is going to keep their money until the end of the guarantee period. And to make sure the money stays, insurance companies have what's called a surrender penalty, that if you change your mind and want your money out early, remember, if you want your money out early at the bank, the penalty is only loss of interest. At an insurance company, you could lose some of your premium. So a MYGA will have a surrender charge period to make sure you don't change your mind. But knowing that most consumers want some access to their money, just about all insurance companies design MYGAs with a liquidity feature. These are called free withdrawal features. The most simple is like a bank CD, where you can pull out interest only. So a client that wants to take his earnings out each year but not touch the principal might want this feature. Let me tell you how a MYGA like this was great for a recent client of mine. I was working with a couple to fill an income gap and with guaranteed income. And one of the assets they had was $50,000 in a bank CD. And when I asked what the purpose of the CD was, I learned that the money had been given to the wife from her father when he passed away. And the couple actually referred to it as Dad's CD. And they were very clear they did not want to tap into the principal. Well, as it turned out, the wife had just celebrated a birthday, and I offered this suggestion. Let's take Dad's CD and drop it into this 5-year MYGA. It's currently paying 4.15% with an interest-only withdrawal feature. And starting next year, Dad is going to give you a check for over $2,000 each year for the next 5 years. Happy birthday from Dad. What's the result? Dad's money will remain intact, and his daughter gets a birthday gift from Dad each year. Well, other contracts offer a percentage of the initial amount used to buy an annuity, or the premium, or a percentage based on the policy's current contract value, like 5 or 10%. With this type of feature, a client could take out X amount each year without penalty. Now, this would be a good choice for clients that want to access more than just interest to spend down an asset, or they just want to have a higher free amount just in case or just because it feels good. Now, liquidity feature with a 10% free withdrawal would cost more than an interest-only withdrawal when the insurance company builds the product. So your need for liquidity should be considered when choosing a MYGA. Where are we now? 4, surrender charges. We already discussed that MYGAs typically carry penalties for early surrender in order to credit higher interest rates. But life insurance companies know that stuff happens. They're in the business of protecting you when stuff happens. And what kind of stuff? Stuff like getting old and going to a nursing home, getting sick, terminal illness, or death. That's the stuff that happens to people that life insurance companies help protect against. So MYGAs often have waiver of penalties. The most common waivers are admittance to a nursing home, diagnosis with a terminal illness, or death of the owner, where the company waive all the surrender charges. And like liquidity features, each of these waivers have a cost that are built into the annuity. So if you want a higher interest rate but fewer surrender charge waivers, or a slightly lower interest rate with more surrender charge waivers, a retirement planning specialist can help you decide. 5th on our list to consider are end of term options. So what happens when you reach the end of the guarantee period? Well, just about all companies will send you a notice a month or 2 before the end of the guarantee period, asking you to decide what you want to do when you reach the end of the term. The most common options are take out the principal and interest and receive a 1099 for any taxes deferred, continue to a new term at new current interest rates and a new surrender period and continue to defer the taxes, keep the principal and interest on deposit without a new surrender period earning a minimum interest rate, or take a free withdrawal and renew the balance to a new term. Or you could make a tax-free exchange to another annuity with another company and continue its tax-deferred status, or convert it to an immediate annuity. When considering a MYGA, be sure you know what the default is at the end of term options. For some companies, the default is that if you do nothing at the end of the 30-day term, it's going to renew into a new term in a new surrender charge period. If you tend to procrastinate, this might not be the best option for you. Personally, I like a contract that gives you a 30-day notice, and the default is they keep the money on deposit without a new surrender charge until you decide. That way you keep the liquidity. Now, the final consideration to consider when buying a MYGA is what kind of service to expect from your new partner, the insurance company. Well, do they have an easy-to-navigate online portal? Can you access policy values online? If you need help or if you want to make a withdrawal, do they answer their phone? Can you get them? Can you call them? I suppose you should also be to expect that from the guide that helps you with your MYGA. So nobody likes bad service, but I guess that we all tend to expect it sometimes. At restaurants, I'm usually happy to leave a higher tip for good service. It may not be important to you, but I will typically, all things being equal, I will typically place that client with the company that gives the better customer service, all other things being equal. So what do we cover? We discussed what MYGAs are. We talked about why people buy them. And we discussed the 6 key factors to consider when choosing one. You see, MYGAs provide safety, security, and peace of mind. And if you want guarantees, a strong interest rate, and tax deferral, then a MYGA might be right for you. Like most financial products, if you want to buy MYGA, you need a guide. And since a MYGA is not a commodity, you might want advice about which one might be best for you. Your guide might be your banker, it might be your financial advisor, might be a stockbroker, but they must be a licensed insurance agent in your state to offer any type of annuity product. If you have more questions about MYGAs or you'd like to buy one, I'd be happy to help. My name is Safe Money Steve. I'm Steve Harris at Harris Retirement Advisors. I specialize in helping those people in the critical few years before or a few years into retirement to help them secure safety, security, and peace of mind in retirement. If you'd like to see if I could do that for you, then send me a note below or check out my website at www.harrisretirementadvisors.com. You can schedule a no obligation consultation to see if I could help you. Now, if you just wanted to learn more about MYGAs and found my video helpful, then please give me a like or subscribe to my YouTube channel and check out my other videos. There's plenty on there on a variety of topics. My goal is to use my product and training background to take the confusion out of annuities and help as many people as possible. Call me directly, contact me through my website, or leave a comment below for me to contact you to protect your safe money. Do it now before you forget. And thanks for watching.